Good morning, everybody. Welcome to the Game Plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. All right, we're going to dive into the charts, the data, the probabilities, and the trades as we get into today's session. First and foremost, the big news that hit Friday night was that Moody's downgraded the U.S. debt. All right, so again, their debt rating or our debt rating here in the U.S. did get downgraded. The kicker to this is that basically it means that interest rates go up in response. It essentially makes the U.S. slightly higher risk to loan money to, and therefore to compensate for that, interest rates go up just a little bit. Now, if you've been following the 10-year yield chart with me in these game plans, we knew that the 10-year yield had broken out, which told us we were likely to go higher. We're going to take a look at that chart in just a minute. In addition, there have been some comments from Scott Bessent, Treasury Secretary, basically about tariffs, saying that if no tariff deals are reached, then the reciprocal tariffs will go back on now in about 2 months or so, give or take just a little bit. So again, there's some key things that are a little bit concerning because no official deals have been gotten done, or at least getting close to being done just yet, raising the risk of tariffs going back up. Now, remember, tariffs are still there. For instance, on China, it's still a 30% tariff, but a long cry from the 145% tariff that we have had. All right, flipping into the S&P 500 here. Overnight, you can see we were trending lower, lower, lower. And then right around 5 in the morning, some buyers have come in here and we've lifted back just a little bit. However, we are still down about 1% on the S&P 500 headed into the opening today. So we are looking at a gap down. If you remember, on Friday and Thursday in the game plans, I showed you signals that we were going to get a pullback. The VIX was starting to perk up. The VXX put in a short-term bottoming signal there. That was telling us, again, remember, the VIX is a fear index. So it was coming down sharply over the last couple weeks. And now ultimately, based on last Thursday, Friday, it started to perk up. That's telling you big money is starting to buy protection. I went over that in Friday and Thursday's game plan. If we flip to the daily chart, you can see what level we had come into. Now, listen, we've gone through a lot of technical resistance on the way up, creating what we would call a V bottom, right? Here's your V, down and up. And ultimately, we have stopped at this point right now, this little pivot area here, this little pivot area here, and right through this area here. So listen, do we know if the markets are done going up? The answer is absolutely not. We don't know. What we do know is that we're getting a pullback off some resistance. We need to watch on a technical basis how this forms. Now, what do I mean by how it forms? Well, suffice it to say, if we just go like this for the next couple of days, what type of formation would that be? Right? So think about it like this. Here's your up move, and this is your kind of consolidation or flag pattern. That would insinuate probability would favor another move up. Now, on the other hand, if we start to get a sharper move down, okay, so let's do that. Let's just say we get a big correction this week and go all the way back down here to this area of support around 5,500 on the futures. Well, then it's not a bull flag anymore. And now you actually look for consolidation like this that eventually yields a move to the downside like that. So, this is really important, guys. So as we go over charts, always remember that the charts are in charge. So for me as a trader, one of the biggest lessons I learned over the course of time was understanding that I have no say in what the markets do. I can only read the candlesticks and figure out what is the most likely outcome. But again, I can't force anything on the market. The market's in charge. All we can do is watch every single day and say, okay, that fits into the bull flag category. Oh, that fits into a reversal engulfing candle. Okay, that means further downside, or a bear flag, or a topping tail. Speaking of topping tails, I got to show you this one because this was one of the great calls from last week on UNH. So I believe it was last Thursday. I came in here and I said, guys, UNH is gapping sharply lower. I said there's major support down here. The stock on the daily chart was already down over 50%. And this is United Health Group, guys. This isn't like, this isn't Rigetti, or this isn't some random kind of, small cap. This prior to this drop up here, this was a $500 billion company. So to see that disintegrate by 50%, it already had me on alert. And I said, guys, this is probably your capitulation flush out today. The volume was massive, massive, massive volume, which is another signal. And then you get the bottoming tail. This is what we call in technical analysis a bottoming tail. It's a reversal signal. Essentially what it tells you, and I'm going to throw volume in here. I don't have it up, but I got to throw this in because it is that important. Bear with me. Look at on the bottoming tail here, this candle, look at the volume. Like literally you could go back decades on this stock and you did not have volume that was ever this high. So volume, epic volume with a bottoming tail. What is that telling you? It's telling you that pension funds, mutual funds, retail investors panicked. They dumped, which caused the price to go down to about 249. And then big money came in and said, you know what? We're buying this all up. That's what capitulation is. It's where the weak hands throw in the towel and they just dump in panic, and smart money comes in and accumulates, right? And so what do we end up seeing here? Well, if we take away the volume so we can see again, we get the bottoming tail. Friday rallies up, and then look, we're trading almost back to the gap fill from prior day at 307. So this stock has now gone from $250 right down here, right? Now basically trading up 22% in basically 2.5 trading days. Incredible. And that's a $250 billion stock. Was $500 billion, but I mean 22% on a $250 billion stock is incredible off of the lows, but that's the essence of capitulation. Okay, in any case, just flipping back here, guys, again, looking at the 10-year yield. Here's the 10-year yield spiking up today, trading at 4.52%. And again, we could very clearly see what type of pattern is this formation here, right? So if we flip back to our tool here and we go our arrows, this is your flagpole. And then what type of pattern is this? This is bullish consolidation. Notice how you get the small check back here and then the breakout. Okay, now it checked back there and now it's trying to go higher. All right, so again, classic pattern recognition basically told you what was going to happen here. Now, the other thing that had my attention telling me that we could likely break out was, and I showed you guys this last week as well, is that you actually had an inverse head and shoulders, which is another bullish signal, right? So if we go to our trend tool here, or one of our tools, here's your head and shoulder right over here, and you could see here's your left shoulder, your head, and your right shoulder, right? So there's your shoulder, head, shoulder. Inverse head and shoulder is what it's called in technical analysis. And essentially that's a bullish pattern formation that essentially tells you that it's going to go higher. You add that to the bullish chop here above this breakout. Notice how it respected this down sloping trend line right here. It held that low, went up, pulled back, and then broke out. Now, a lot of people are asking me, okay, well, how high are yields going to go? Right? I mean, at some point, even I believe yields will come down dramatically, but we have to get through these kind of hurdles with tariffs, how much inflation is going to be in the system, et cetera. But to do that, one of the things I'm doing here is just looking at a simple trend line. So my upside target on the 10-year yield is back to 4.74%, basically 4.75. I'm easily finding that by taking my major pivot high here, going back from October 2023 to my secondary highest pivot right here in January of 2025. That gives me an upside target of where the yield likely goes, but then also pulls back from. So maybe a short on the 10-year, right, at that level right there. And by the way I play the 10-year is the TLT. It's actually TLT is actually the 20-year Treasury bond, but essentially you buy this when you think yields are going to pull back, right? So you can see today TLT's down because yields are up. So if you think yields are going to pull back, you buy TLT. Needless to say, I'm not in TLT yet, but if the 10-year gets up to that 4.74 to 4.75 level, at that point, I probably do buy the TLT and look for a swing trade long. The dollar's next. So did you guys, all right, so regardless of today, so we all know the dollar is dropping today, right? Because any sort of debt downgrade makes holding dollars less nice, essentially, to put it in a simple term, right? It's just less lucrative. It has more risk of holding dollars, just like it does for holding U.S. debt. So the key is, did the charts tell us that the dollar was to go lower? or does it tell us that we're still going to go lower? And the answer is yes, it told us both. So to just go to this chart, this is a chart I've shown to you guys before, but very simply, you had a major trend line from this low to this low, right? Notice again, we tagged it for a third time, bounced, fourth time we broke, we retraced to the scene of the crime. And what usually happens on a retrace to the scene of the crime? Price gets rejected and comes back in and ultimately usually goes lower, in fact. So not only does it tell you that the dollar from here, which was last Monday, so 1 week ago, we tagged the scene of the crime, which is, remember, in technical analysis, support, and even support, once it breaks and confirms, here's your confirming candle, this now becomes resistance, major resistance, right in there. And so you can surmise that you should be rejected there, and price usually continues its downward descent. And so really the dollar here, if you look at, listen, it's not to say the dollar won't have bounces along the way, but ultimately you would expect the dollar to go lower based on technical analysis, which is basically probabilities, right? Probability is what technical analysis gives us. All right, so that's a rundown of the US dollar. Netflix getting a downgrade today, folks. This stock is so overbought. It's actually one of my favorite shorts right now at these levels. It's only trading down a little bit. I mean, it's down about 1.5%, but this move alone is an epic move to the upside. There's so many upsloping trend lines kind of right in this vicinity. Whether you take this one here and you bring it up here, or, there's other ones that connect through some of these other pivots. But suffice it to say is that, yes, Netflix is a fantastic brand. It's a fantastic service in general, but this is way ahead of its skis. If we look at this in terms of percentages, the stock even just from this low here on April 7th, up 45%. And again, remember, this isn't a small company. This is now basically a $300 billion company. So that is a big move on a company of that magnitude. The semis, let's take a look at the SMH. The SMH put in a little bit of a hit here. You can see we even went above it last Wednesday, but we never confirmed. Today, the semis are pulling back. Again, huge move up in the semis, but higher interest rates are not good for the semis or for technology in general, and we are seeing a pullback on this news. And honestly, this stuff was just overbought, right? I mean, with members in smart money stocks and ETFs, I bought SOX, which is a triple inverse to the semis, so it goes up 3x. If the SMH goes down 1%, SOX goes up 3%. Just be aware, folks, that these are only short-term trading vehicles. The SOX goes to zero over a longer period of time, just like any double and triple ETFs generally go to zero in the not too distant future, right? I mean, again, it takes a while, but I always want people to understand that triple and double ETFs are short-term swing trading or day trading vehicles only, not long-term investments, all right? Because you guarantee yourself a loss if you hold these things long-term, just the nature of the beast, okay? But in any case, the point being is that this should continue to rally because the semis should be on a path of pullback. I would estimate you'll have a little bit of support right here on the SMH, but really this is where I'm looking for a pullback, where then I'll reevaluate, do we turn back up and go higher, or do we consolidate and eventually break to the downside? All right, Bitcoin. Let's get over to Bitcoin. Bitcoin, amazing, folks. This is really shocking, and I love it for educational purposes. So we had our bull flag. Basically the last 2 weeks on Bitcoin, that's case in point, this pattern, bull flag. But remember, every pattern can fail. In addition, every pattern will fail a small percentage of the time. So when you have a great bull flag, maybe you get 70% probability odds, which is pretty good odds. Like, I mean, if you're someone who goes to a casino, you dream about having a game where you can win 70% of the time. In fact, there is no game because the casino would ultimately lose if people play that game enough, right? So the kicker is just understanding that every pattern, every level has a failure rate. It's a lower percentage than the non-failure. And that's the kicker there. And that's really, once you understand that in technical analysis, you become a much better trader because you understand that you can lose, which makes you bet less on a specific trade. It makes you more conservative, which actually makes you wealthier in the long run. It's kind of a weird thing, but basically protecting yourself keeps you with investable income so that you can put the odds in your favor on lots of other trades and make more money versus going all in on one trade. The point being, On Sunday, we started to break higher. I even thought we were breaking out here. I mean, it looks like a classic breakout. And look at today. Now, listen, today is not over. So if for some reason Bitcoin rallies back above this line here, okay, now you could be saying, okay, well, it's still got the bullish pattern breakout potentially on it. You closed above this pattern. It should really, I mean, you could get a small check back, but you don't want to close back underneath these levels here, these kind of high pivots here. This candle, in addition, is a nasty retrace candle. Like that's almost a reversal engulfing bearish candle. So that is not good for Bitcoin. And listen, I'm going to say this again because I need everyone to really understand. Today is not over. We still have a lot of time left in this daily candle of Bitcoin. We need to see how it ends the day. Maybe Drew will go over it. I think he will in trading the close today. So you guys can check back in, or I'll go over it tomorrow as well. But if we end down here, I would say this is a very nasty reversal signal on Bitcoin and could be problematic for it reaching its former all-time high. And then if we break below this level on Bitcoin, watch out below. This starts coming towards 95, 96, 1,000 right in here. All right. So again, just very clear that this looked like a breakout yesterday. It may be failing today, but we will watch it later today. Gold is up today. No one should be surprised. Anytime you take a sledgehammer to the U.S. debt rating and bring it down a notch like Moody's did, then gold is going to be the safe haven asset, especially with the dollar lower, right? Anytime the dollar goes lower, generally gold goes up. But you add in the uncertainty of debt downgrades and tariffs reemerging as maybe an issue, and all of a sudden gold goes up. Now, again, it did hit our target down here, so that makes sense that we could be seeing a pop. But remember, do we think gold is going straight back up, or do we more have a question mark on price action? And the answer is you should have a question mark. Why? Why would we have a question mark? Well, because technically speaking, what type of pattern is this? Down move, inside bar consolidation. This could be, now listen, it's what I would call an immature bear flag, but it's still potentially a bear flag. And immature patterns don't have high probability yet. So you're just basically on alert for this price action. And if we spike the next couple of days and we go up here, well, then there's no bear flag. If we continue going sideways, it could denote a retest here and maybe even a move lower on gold. Now, my mid to long-term outlook on gold still remains extremely rosy, but I'm just trying to be super honest with you guys is that, just because you got this, it doesn't mean, number one, it's going straight up, and it doesn't mean, number two, it's going straight down, right? You have to wait for the pattern and recognize, and every day we get a candle, we get another piece of the puzzle to try to figure out what is the most likely outcome on the chart. All right, looking at silver, I actually picked up a little silver long on Friday, guys, as the chart pattern is looking decent here. It hasn't done much so far. It's just pausing here, but I did go long a little bit of silver, looking for maybe a breakout. It's such a small position that even if it dumped down here, I would just dollar cost average the position. All right, oil. Oil, again, has kind of been chopping in that bearish, remember, flag down, up, down, up, down. Basically, it's starting to make a larger bearish pattern, consolidation pattern here. Although I will say, we do want to keep an eye on a potential inverse head and shoulders. But again, it's not fully formed yet. But these are all things that actually can't be. You have a lower pivot here. So you can't, the head has to be the lowest point. So that wouldn't be considered a bear inverse, even a potential inverse head and shoulders on oil. And just for everyone to understand that, when you have an inverse head and shoulder pattern, let me draw it in. That's not the head and shoulder pattern tool. Bear with me. I'll just do this education. So let's say we have shoulder, head. The head always has to be your lowest point. Okay. So here's your head. It has to be the lowest point. So see how we went slightly lower here than here. So that right there, as soon as I saw that, I said, oh, no, can't be an official inverse head and shoulders. Now, that doesn't mean price can't rally back up. It just means we don't have the pattern that gives us the probability for that to form, for that to be potentially a trade. But in any case, just wanted to give you guys that little educational piece right there. But let's continue to watch oil here. I don't have a trade on oil right now, long or short. I really, again, mid to longer term is bearish bias, but we're just seeing, do we go back up here, in which case I might take a short if we were to rally up into that 65 to 66 level. Natural gas continues to stay weak. Look at this. Just, amazing how, again, this is the classic retrace to the scene of the crime, right? Trend line of support, broke, resistance, rejected, down it goes, up it goes, into resistance and rejected again. So again, very classic. And you'll see that the more you watch these game plans, guys, the more you watch these episodes, the more you're going to see a theme where all I'm doing is looking at the pattern that the candles are forming, drawing some trend lines, and I'm getting a very high success rate. And that's the key, is getting that 70, 75, even 80% when you start to get multiple factors in alignment. And obviously, guys, the Winning Trader series that I did shows you all of this. It goes into everything that's in this head of mine for 26 years now in terms of all my knowledge. But again, folks, you tune in every day here. My goal is to always give you guys nuggets of wisdom and information so that you guys can make better choices based on data, probability, and charts, right? I mean, essentially, you don't want to be the person that goes to X or to Facebook or Instagram to find your information on what you should buy next, or even Reddit, right? I mean, not to say they can't run stocks incredibly. They can pump plenty and then dump, right? Pump and dumps. I don't play around with that. That's not my forte. My forte is playing mid to large cap, Bitcoin, oil, gold, and finding those high percentage trades where I know that if I do this 100 times, I'm going to win 75% of the time. 25%, I've already accepted that's going to be a loss rate, 25%. But it's a game of numbers, and you got to be the casino. You got to be the player that plays every time, and you know that you'll lose sometimes, but you win a majority of the time. All right, guys, I got to get to my trading room, the Apex Live Day Trading Room. Going to be trading all day today. Let's see what this market has in store. Thank you guys for tuning in as always. I always say that, but I seriously mean it, guys. If you guys weren't watching, I wouldn't be doing this. It's just that simple. So thank you for each and every one of you for spending 20, 22 minutes a day with me here on the Game Plan. Take care.